All right, Patrick, I think we need to dig into the obvious, which is you were right. I know you hate to hear that. You don't like to hear that you were right. But look at this chart on the price of oil. Patrick, it's been trending up, and you've been saying this for some time now. I thought I would give you a little bit of a victory lap as an opener to this episode because you were right.
I know I was right. Oil's going up. I said it would, and it will continue to rise, I believe. And by the way,
Now,
JG, you were wrong.
well, hold on. 100%. We're going to dig into that because that's not true. But I will say this, though. You've been calling that oil was going to go up. Like, if you look at August 2023, you look at December 2023, if December 2023 was, let's call that the low point, you've been calling about this since like the middle of last year. So you were wrong for 6 months, and now you've been right for 6 months. So are you going to be right or wrong in the next 6 months is the question.
I actually said, going into the second quarter of 2024, we'd start to see oil prices go up. So that's what I got to say about that.
Yeah. So where do you think they're going from here?
They will continue to rise, and I think that, and I don't want them to. By the way, it's not. I don't need to be right. I would love to be wrong in this case, but the reality of it is, with the wars escalating, and there are a number of them, we're going to see oil prices go up, especially given that the Middle East is so full on in all of what's happening. So that's where I see it going.
Well, I just, I hate that you were right, but I got to give you the victory lap when it's, credit due where credit is due. So there you go. You heard it here first, ladies and gentlemen. You heard it here second, ladies and gentlemen. And you're going to hear it again and again and again because when Patrick's right, Patrick's right. Now, I'm making a list off to the side of all the times Patrick wasn't right, but I'll bring that up on the next episode.
Well, do that, please. I would love to be wrong. It's like interest rates. Everybody's saying there's going to be a couple cuts. I'm going,
nah, I don't think so.
Yeah. All right. This is fantastic. Hopefully, I just love, here's a funny story, Patrick. I was standing at the pump literally like just 2 hours ago, filling up my car, and this gentleman filling up his like Cadillac Escalade or something, peeks over the pump, looks at me and says,
"Good news. It was only $170 to fill this."
That sounds just inflation. And then tucks back around the pump. I started dying laughing.
So imagine, JG, you're $1.65 for gas in Ontario. Here in British Columbia, we're $2.10 a liter, and we have to search to find $1.99, $1.97. So imagine what that gentleman would have said.
Oh, only $225.
I think the answer to this, Patrick, is more carbon tax. Anyways, that's for another episode. We're not going to be talking about this in this episode number 38 of Rein It In. Welcome, ladies and gentlemen, to the show. It's going to be an exciting show with lots of things to cover. So let's get into the sticky notes. First and foremost, we have a massive economic overview we're going to be covering today. Lots of charts, lots of graphs, lots of details. So get ready for that. We will be digging deep into inflation. I know everyone's favorite word, but we got some recent data on some inflation, which you guys are really going to love. And then the new homes. Don't forget the federal government promised that they would deliver 3.9 million homes. Are they on track? Are we getting close? Are they going to do it? You're going to find out in this episode. And then we have a variety of other housing data, essentially coast to coast of what's happening in the real estate market. So you're going to get a bit of that update. It's an exciting episode, Patrick. I'm excited to dig into episode number 38.
Welcome back, JG. Just a reminder, folks, make sure that you subscribe. Make sure that you like. Put it in the comments. What do you like? What do you don't like? We're okay with either, but let us know. Get those algorithms cranked up.
All right, Patrick, let's get into the first topic for today's conversation, and that is we are going to be talking about how the Liberals and NDP promised 3.9 million homes by 2031. 3.9 million. Now, this is nice to say, Patrick. It hits the headlines, hits the newspapers, it's on all the TV stations, so on and so forth. 3.9 million homes. We are going to get out of this housing crisis by getting to 3.9 million homes. Now, is this even, are we even close to hitting this? Number one, Patrick, is the first question I have for you. And the second question is, what are the probabilities of success here? Let's talk about it. Let's break down these numbers.
The probabilities of success are zero.
Whoa, 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 whoa.
When we look at the numbers, I mean, to consider that they're talking about doubling our best year ever, which was like whatever year it was back in the 60s or early 70s or something. I think we had the most. But when we look at the math, you're talking about doubling the best time or the best year ever when interest rates are at record highs, where construction and labor costs are not only high, there's limited amounts that we can do. And I think the math is 1,528 homes a day. I'm just looking at my notes, 64 homes an hour for 7 straight years, including and meaning you would have to also work weekends. So the probability is zero.
See your point.
It's not looking good for us to hit this, Patrick. And listen, I'm super fired up around this. I mean, I have committed the entire Vistor Property Group and Vistor Property Management Organization to try to help this housing crisis. And I tell you, we're getting, it's block after block after block. We're getting stopped at every level. And it's absolutely incredible, the politics that are out there. And I'm sure we'll dig into it. But I think you're right, Patrick, that if you just break down the numbers, 3.9 million homes, and if you break that down, they're just not going to hit the numbers. There's just no way. So this poses a really interesting question, which is, what are we going to do? You got families that can't afford to buy. You got lots of families that can't afford to rent now. And we're going to be looking at supply and demand data in just a little bit, where supply of housing is at an all-time low. And as the supply gets
Lower and lower.
the price goes higher and higher. So this is really not trending in the right direction, is it, Patrick?
It's certainly not. And I want to just qualify something, as we go into this episode, JG, there's just no real good economic news. That's just the truth of what's happening. But having said that, we have to get out of that fray, if you will. We have to look at it through the lens of being investors and say, okay, within this chaos, this confusion, this uncertainty, this frustration with a government that doesn't seem to know what the hell it's doing is opportunity. And so as much as we look at the economic data, we get frustrated by it. You, in fact, are at the effect of it, given the projects that you've got going on, the bureaucracy of what's happening, and the blocks that you run in terms of even getting your units onto market, getting a shovel in the ground, for Christ's sakes. I mean, it's really nuts. But my point is, in all of that lies the opportunity to put capital to work, to get it into a hard asset, a store of value called real estate. And I think we need to just stay focused on that. And that's really what we need to do.
So in order to hit the 3.9 million, they actually have to double the best they've ever done before. They have to double. That means 100% plus growth. The best they've ever done, not the average. The best they've ever done. That's what that means. And here's the housing starts as of February 2024. These are the real numbers. This is where it's at. Whereas Canada in general, and that was a Canadian statistic, 3.9 million homes across all of Canada. Right now, we're growing at 5%, 5.3%. In fact, there's many provinces like Quebec, like Ontario, like Manitoba, like Saskatchewan. And by the way, the bulk of Canada's population is in Quebec and Ontario. Both of those are way down. Manitoba's down almost 45%. Same with Saskatchewan. I mean, Alberta's doing really well. BC's up 21%. That's actually pretty good for BC. Atlantic Canada is way up, but there's nobody in Atlantic Canada, so you're not really making a dent in the whole overall population here. The fact is that in general, we're really failing at this, Patrick. And these are the kinds of numbers that I think the federal government has to be accountable to. If they're going to say things like we want to hit 3.9 million new homes, they should start publishing this and start tracking this the same way we would as business owners.
Well, I think this is so important to understand. As a sophisticated real estate investors, we look at all the economic data so that we can kind of sort through and get to what the truth is. As we go into an election year, we're going to hear all sorts of kind of stories, if you will, and outright, I'm going to just say it out loud. They're going to just be lying. Let's face it. 3.9 million homes to me is just an outright lie. There's no possible way that they can hit that, yet it will speak well to those who are going, oh, okay, our government's going to save us. No, our government's not going to save us in this housing crisis. They continue to create it, and the same people who create the problem aren't going to fix the problem. So this goes back to, again, we have to sort through all of the clutter and all of these kind of headlines, if you will, that are all meant to ramp up towards an election year.
So here's some more great charts, Patrick. On if you look at the blue bars indicate essentially supply, and the red line indicates the price change. Now, to me, you don't have to be a rocket scientist, you don't have to be an engineer, you don't have to be really smart because I'm not particularly smart. But you can see how anytime there's a dip in the blue bars, the red bar goes up, right? That means that as supply goes down, the price goes up, and that's exactly what's happening again right now. So even though yes, interest rates are way higher than they've been, 20-year highs. Patrick, because the supply has come down, that has put a price on the floor. So some people are expecting a big price drop in real estate. This will not happen. Just look at the data. There will not be a massive price drop in real estate because the supply is going down. As a result, the price of real estate is going up. And you can see it right here in this graph.
Well, exactly. And you know something, JG, it's so important to point this out because one of the things as investors we look at is going, okay,
where is this all going to go? I've got real estate, or I want to buy real estate. I've got rentals. What is going to happen to rent?
It is really an interesting time, isn't it? Because supply just isn't about building more. It's about what are people doing, and they're not selling. Now, we, of course, have these regional pockets, and we have to make sure that we understand and remember that real estate is regional. But the other part of the supply issue is because of interest rates, people are not selling because they know that in order to buy, they're walking into a much higher mortgage rate. Now, some of this is starting actually to get normalized depending on what province you're in, but ultimately we're seeing the supply continue to trend down because people aren't listing. We're not able to build. Again, you're a perfect example of what developers are bumping up against, which is number one, bureaucracy. Number one, the deal doesn't pencil anymore. The math doesn't work. So supply is going to continue to be an issue regardless of the economic conditions. So to expect a big crash in real estate prices, you'll be sitting on the sidelines a long time and you're going to miss some big opportunities.
And that right there, Patrick, I think is the beauty of what you just said is exactly right. Is people are waiting on the sidelines, waiting for this massive drop. It's just not going to happen. Look at the data between March 2023 versus March 2024. In every single province, the prices are up except for PEI. And if you look Saskatchewan, fairly flat. But you look at all the rest of them. I mean, BC up just over 6%, Alberta up 11%, Manitoba up 7%, Ontario up just under 2%, Quebec 7%, New Brunswick 7%, Nova Scotia up almost 10%, and Newfoundland up 9%. This is year over year prices, Patrick. We're not comparing this like we're comparing this to last year. So in a time where the market gets tighter and tighter and tougher, the prices continue to escalate. And this is what I've been trying to make these. I'm currently in discussion with many counselors in the various municipalities Visture operates in. I'm trying to make them understand this. Like, guys, the more of this intra conflict you guys create, and the more of this bureaucracy you put in front of us, and the more of this the only people this is hurting is people who can't afford homes, can't afford to buy a home, can't afford the rent, and this just continues to escalate while they have their head up their ass trying to figure stuff out. It's just not getting better, Patrick. It's getting worse, if anything.
Well, there's a fundamental that we run into, right? When we have bureaucracy and we have government, this is the challenge that we always run into, is that those individuals who are sitting behind the desk making these calls actually have no relatedness to what goes on in reality of being in the market. They're at the effect of it, or they hear about it, months down the road, but they're not in it. Like you are looking at it on a day-to-day in the trenches basis, as many of our investor listeners are. And so they don't relate to what is actually happening. And something I don't want to step over in all of this is that rents continue to rise. And as much as we saw that chart where you showed Saskatchewan being flat, the one thing that Saskatchewan is enjoying because of that is, although appreciation on real estate has not been big, guess what? Rents are. So cash flow in Saskatchewan is off the charts. I've talked to a number of investors in that province, same as Manitoba. They got some really strong cash flows happening because rents are continuing. So having said that, they're giving up appreciation, but cash on cash return and cash flow is great.
That's all part of the ROI of real estate, no doubt about that. So let's look at this final chart, Patrick, before we move on to the next topic here. And that is, as the world continues in the direction that we're going, affordability becomes more and more challenging. And I'll give you kudos on this, which is you were 100% accurate. This is 2 times I'm crediting you in the same show, Patrick. I just want you to pay attention to this. But this is, you were absolutely right about affordability and how that was going to be a massive driver going forward. You talked about this right as we entered COVID, as we came out of COVID, and you're 100% right. And affordability is getting more and more and more difficult. Even though the price of real estate in some markets, people think it's gone down. I just showed you charts. It's actually going up. That compounded on top of higher interest rates makes affordability even worse. And that does not help inflation, which we're going to talk about next, Patrick.
Yeah, and I want to just shine a light on a couple of things. Again, we joke about me being right and all the rest of it, and that's great, by the way. And more importantly, around all of it is that it's just to lend credibility to the fact that when we're guiding people, when we're showing and teaching people how to read and look at the economic fundamentals, is that there is a track record that, yes, this stuff really works. Looking at the economic fundamentals, the way we educate, the way we teach, is an effective way of anticipating and looking into the future as investors. I mean, go back 4.5 years, JG, when we were talking about Calgary. I mean, we could not have beat that drum any harder in talking about Alberta, to the degree that you started calling me Mr. Alberta. Well, listen, I'm agnostic. I want to go where the real estate and where I can put money to work and get the best return on my investment. We saw that trend based on the economic fundamentals. So as much as we joke about me being right, it's more important to shine a light on the fact that understanding the economic fundamentals is what gives you the view of the future as a real estate investor. So when we look at affordability, and this almost gets like, how much harder do we need to beat this drum? Rents are not going to go down anytime soon. Yes, you'll see little undulations and nuances, but ultimately the trend is going to go up. And I'll make the call here. Don't know where we want to put this segment, but I think we're going into the world of stagflation. And I think that people need to be prepared for that. And that as investors, we're going to see that.
Now, Mr. Alberta, listen, Patrick, having said all that, and I think that's fantastic. My question is this, you called it about affordability, you called it about Alberta, fantastic. The question is, where do you go from here? Given affordability, given the difficulty of doing business in the space. And I got to say that I'm seeing more deals out there than I've seen in many, many years. I mean, it's for someone who's really in it and is willing to work it and has capital available to them. It could be a phenomenal market right now. I know I'm experiencing that myself, even though it's very difficult and it takes a lot of work, more work than ever before. It doesn't mean it's not workable. I want to make that very clear for people. But for the average person, Patrick, I can appreciate, and you can appreciate, that the average person that has a full-time job, has got a family, kids in hockey, got all kinds of stuff going on. Like, they don't want to slug it out with me for 60 hours a week in the real estate market, perhaps. So what should they do?
Well, one of the things that we teach and we've shared many, many, many times, which is that there's no bad market to invest in real estate. There's just the wrong strategy. And right now is the time for many to start shifting the strategy. So let's break this down. First and foremost, we know that economically, when we look at what's happening, we're starting to see a slowdown. But when we look at housing specifically, we start to say, okay, the market continues to grind higher, rents continue to go higher, demand continues to increase just because of population, and then the issue of supply that we have, which is not enough supply. So as investors, what do we do? Well, to your point, JG, it's harder than ever to get mortgages, to find deals that cash flow, to find deals, period, because there's so few listings. So what do? The next phase is, okay, we see the opportunity to put our capital to work into a store of value, given where we see the global macro and what's happening in Canada. We need to get our money to work. This is so important. Inflation is not going away, and our dollars are losing value just consistently, monthly, weekly, yearly. Put it to work. Where to do that? So ultimately, we look at limited partnerships. We look at general partnerships. We look at private REITs. We look at private funds. Now, you have to do your diligence on those, JG. But if you understand the economic fundamentals that we've been teaching for 30 years, you say, okay, I'm going to take that and I'm going to apply my knowledge to looking at that limited partnership, looking at that general partnership, looking at that private REIT or that private fund. And then I can start to place capital. I don't have to go to the bank to get a mortgage. I don't have to come up with 20% down. I mean, there's lots of funds out there. You can get in as little as 25 grand. And so there's opportunities that are out there. The key here is, how do I get my money to work in real estate?
And Patrick, you make an interesting point, which is you don't necessarily have to, and I know I do this as well. You don't have to, it's not all or nothing. It's not like, you put all of your money necessarily, a lot of people want to hold real estate themselves. They want to have that duplex or that triplex or that fourplex or whatever the case may be. Fantastic. You should go ahead perhaps and do that. If you have the willingness and you have the, if you have the knowledge and the education, and if you've learned from, incredible organization like the Real Estate Investment Network, then you should go ahead and do that. But that you can do other things too. And I know that I've moved to other, for example, I work with with a real estate investment trust that invests exclusively in industrial real estate because I want exposure to the industrial market, but I don't want to do it on my own. I want to do it through them. So I work with them in industrial, and I have another partnership that I do commercial investing in Alberta, for example. So the point there, Patrick, is it's not all or nothing. And sometimes people think in all or nothings. They think, oh, I should put all of my money with REITs. Well, not necessarily. You might want to diversify it, but definitely I agree with you, Patrick. REITs, LPs, GPs, when you do your proper research on this could be great options for real estate investors to at least get themselves in the games and get off the sidelines. That's the critical part, because while they're on the sidelines,
hey, what's happening?
Your money's being devalued. Your wealth is being eroded. You're not getting a return on investment, or a very small return on investment. You're not growing your wealth, and you're not in the game. And when you're not in the game, it's very difficult to make a difference in your overall financial future. You only have so many years here to get your financial future under control. It's important for you to be in the game, on the ice, if you will. Unlike the recent Toronto Maple Leafs that are completely shitting the bed, might I add.
Yeah. Well, of course, that's kind of expected of Toronto. But I think there's we go back, and I'm just going to keep shining a light on this. Inflation continues. We are losing value in our currency.
We should talk about that though, Patrick. We should show actual numbers, because you say that, but what's funny is that inflation's kind of out of the news now, right? It's kind of lost its luster with the news cycle, I find. So why don't we look at what's actually happening with inflation right now? Maybe I could put up a couple charts here in terms of what's actually happening with inflation. And there it is. There's a great bar chart showing inflation. Then you could speak to what you're about to speak about.
Well, I think, at the end of the day, what we see, and we continue to see since the pandemic and all the things that went on, where printing of money, the debt that Canada's taken on, we're going to continue to now buy our own bonds. I mean, it's just so crazy that we have this huge debt. Taxes are going to continue to rise. And so aside from, CPI, and when we look at what the shelter costs are, that CPI is significantly higher. They keep pretending it's coming down. And as you're going to the store, you're buying food, you're buying gas. We just had that conversation. There's nothing that in terms of our day-to-day costs of living that prices are going down. Go to a restaurant, you're paying astronomical numbers just to have a meal these days if you want to go out. So the point of it is this: we have to put our capital to work. And I can't stress it enough. The value of our currency globally, I mean, whether it's US or Canada, and Canada is really losing out to what's happening in the US right now in terms of that exchange, the debt levels that we have and the payment that Canada has on that debt, our dollars continue to shrink in terms of value. We have to get it invested. Real estate is that store of value, and we need to put our money to work.
So this is right here, folks, is what's happening in the inflation camp. So inflation's still on a year-over-year basis. This is as February of 2024. In Canada in general, 2.8%. But as you can see, it's quite different, Patrick, on a province-by-province basis. You look at Alberta running the hottest right now. To be expected anytime an economy is running as hot as Alberta's is right now, definitely inflation is going to be up. Probably, I don't know if you expect this to go up or down, Patrick, but it really depends what happens to the Alberta economy, because the previous inflation was really a question of a supply chain interruption and the supply shocks of, that happened back in COVID. But now we're kind of through all of that now. So it's interesting what's happening with Alberta and where it's going to go going forward, because right now they're sitting at 4.2%. And if this doesn't get under control soon, people are going to start shouting from the rooftops again.
Well, yeah, and certainly, but you have to look at percentages and put them in context, right? So if you're in Alberta, you're feeling the rising costs, but when you look at it on a national basis, 4.2%, for example, we were just talking about gas being a buck 65 in Ontario and buck 99 or $2.10 in British Columbia. And when you get into Alberta, you're in that 155 to 165 range. I don't have the exact numbers off the top of my head, but the point is that it's significantly less. So 4.2% on a lower number. So what's your base? Then it starts to, put it in perspective. So yes, it has gone up 4.2%. It's a hot economy. It's going to continue to grow because oil is going to continue to be kind of climbing. And that's always kind of shows up well for Alberta, although they're maxed in their production, I think. But ultimately, that's what's going to start to happen.
Now, interesting, Patrick. Overall, though, you could see here from this chart, CPI is definitely trending in the right direction. I have no doubt. I told you this from the very beginning that the government would be patting themselves on the back, saying they've done a phenomenal job at getting inflation under control. And you're going to start seeing that all over the news, I believe. And you could see the trend from their perspectives going back in the right direction. Now, I think the average person is probably feeling a little different. Hey, I have a friend of mine. Listen, I'm not kidding you. He told me his grocery bill for his family, he's got a relatively large family, 4 kids, 2 adults, $2,000 a month, Patrick, $2,000 to $3,000 a month for a family. I'm thinking, holy crap, that's unbelievable.
Yeah. Well, they're eating well, but that's not that number is totally believable. And when I say they're eating well, I just mean that it's not like they're being extravagant, but that would be a pretty normal bill, and not surprised by that number. But
I want to hear from people that are watching this. Put it in the comments right now. And I want to know, what is your grocery bill? Like, I'm just curious. I was blown away, Patrick. Honestly, number one, everybody knows I don't have kids, so I don't have that part of the budget. But there's no damn way I'm spending $2,000 a month on grocery, not even close. But I don't have kids. These kids eat a lot. I don't know. I mean, it's how much are you spending, Patrick?
I don't know. I don't track my grocery bill. Sorry.
Right? But I don't know. I'm going to ask around the office how much the people here at Vistyer pay. But I mean, it's just crazy. But the point is that, even though inflation is trending down, government's going to be patting themselves on the back. Bank of Canada is going to say, yay, we did such a great job getting inflation under control. I think the average person is kind of saying, like, what the hell? Kind of like that guy with his Escalade this morning, like,
Oh my God, only $170 to fill my tank. Yahoo for me.
And a big part of the reason why this, not only groceries, but also shelter, Patrick, the cost of shelter has gone up. You can see rents there, which is the purple line, continually trending up. And you can see that mortgage interest rate costs has gone up significantly in the last 18 months.
Well, there's a couple things around this, because CPI is dropping. What's happening is everybody's holding out for interest rates to come down. They're looking, probably 0.25% or 0.5% in June, although that sentiment is starting to shift. I'm still in the camp as of today that I don't think we will see a rate cut before the end of the year. Now, we may in the last quarter see 0.25%, like 25 basis points, maybe 50 basis points, maybe by the end of the year, but I don't think so. So as much as we hold out that the Bank of Canada is going to look at CPI and go,
okay, we can cut rates,
it's not going to happen because there's other parts of the market that are still on fire. And I think they're going to be very, very tentative. And so that's part of the expectation on CPI.
Well, number one, a couple things. You told me to point out where you have been wrong. You've been wrong on rates a couple times here. So I'm hoping you're wrong again, because I want a rate decrease, right? We all want a rate decrease, I think. I know you do. I know you do, buddy. But I will say this. I will say that I'm thinking my personal thoughts on this, and I'll come back to telling you how you're wrong in a second. Don't worry, I haven't forgot about that. But one of the things a reason I think they're holding out on rates as long as they possibly can is because I think there's a ton of pent up demand in the real estate market. I mean, I meet with real estate investors and I meet with ordinary people every single day that are just waiting for the rates to come down in order to get back into the real estate market and to buy that duplex or buy that second home or do something. And I think the government knows this. I think the Bank of Canada knows that the minute they come down, there's going to be a pretty massive spike in activity, and they are just waiting that out as long as they possibly can. And naturally, they're going to do what they always do, which is they're going to move too much to the one side. They're going to wait too long, and that might create some pain for people. I do think that's what's going to happen. But that's my prediction on, and I don't know when they're going to take their foot off the brake, so to speak. But I do think they're holding out as long as they possibly can.
Well, I think let's just talk to this a little bit, because we don't have a chart for it, but what's happening in the background right now is, go back to the supply issue and what's happening in Toronto and Vancouver. And definitely what's happening is developers have hit the brake. Now, that's one part of it. So they're not building, number one. Secondly, in Vancouver, they're already starting to crumble. In other words, we're seeing bankruptcies of developers. We're seeing insolvencies. In behind the scenes, banks are having to deal with saying, how do I get my money out of this developer, given that the developer can't get a deal done because nobody's buying pre-construction, yet they've got the project in the ground. And so no dollars coming in because people don't want to invest given the interest rates. So this is starting to, and you're going to start to see a lot of headlines of developers that are insolvent and bankruptcies. It's just starting. There's a lag that happens, JG. It's not like the developer, the CEO, or the whatever corporation wakes up one day and goes,
we're broke.
No, it's a process. And then some of this, and the banks don't want it to go to litigation, but if they do, that takes a long time. So the point is that over the next 12 to 18 months, we're going to start to hear a lot more about developers that are collapsing. And it's already in the works. This isn't rumor. We don't have a chart to show it, but I've been listening to a number of insiders, and everybody's going,
this is not going to get pretty.
So that might be what inspires the Bank of Canada to drop rates, but by then it's too late.
That's the problem, is that these developers, and being a developer myself, I mean, not on that size of scale, but they're going to hang on as long as they possibly can, because they can't unwind it. It's either the whole thing unravels, or it stays alive. Like it's do or die in their business, especially when you have condo towers that are going up. So they're hanging on. They're getting bridge financing. They're getting specialty financing. I mean, they're literally kicking the can down the road as far as they can. And then one day they can't get it anymore, and it's over. It's done. The whole thing gets unbuttoned, and that's kind of what happens in that space. So the longer this goes on, the more of that which will occur. I 100% agree with you, Patrick. And don't think, I believe anyways, that the very powerful developers, they're calling the Bank of Canada. They're working the back channels, and they're saying,
Guys, you have got to lower these rates. You got to give us a break here.
And, you saw this in the US, by the way, a little bit with the regional bank crisis that happened I think it was last year at this time. And then the government came in and put in some policies and saved the day there. That's in air quotes, saved the day. But I'm curious to see what's going to happen here in Canada. But you're absolutely right, Patrick. The longer this goes on, the messier it's going to get, no doubt about it.
Well, I think we've got a headline coming up on it. I don't remember where it is, and we may not have. But, sales in the GTA/Toronto of pre-construction are down, get this, JG, 70%. 70%. That has a huge impact on a total industry, from realtors to lawyers to the bureaucrats who shuffle paper across desks to the banks and the mortgage lenders. I mean, it has a huge impact. 70% in the largest market in Canada in that condo pre-construction world. And I mean, those are epic numbers. So again, we're only starting to hear more about this now. It's like April 1, if you talk to the insiders, it was like April 1 when we should be ramping up. It was the total opposite. Instead of the switch being flipped on, in many sectors or in many regions, the switch got flipped off. And so it's thrown everybody for a loop. And a lot of people were depending on April to be a good month, and it's just not been.
Yeah, it's a really it's going to be interesting to see as the year progresses what's going to happen. And I'll tell you, and I've said it right from the beginning, Patrick, it's always the same thing. The government does too little too soon and too much too late. And they did too little too soon. They kept the rates. And of course, this is all in hindsight. Of course, it was easy for us. And by the way, we loved it when the interest rates were nice and low. We loved it. At least I loved it. So, and the rates were too low, and they didn't raise them fast enough. And even though in our particular world at the time, Patrick, I mean, this is one of the things you said. You said
They're never going to raise interest rates that high.
Well, they did. And they weren't supposed to keep them this high this long. Well, they did. And now they're gonna play this out too far. And this is where that harder landing is going to come. And we'll see. Time will tell in terms of when that's going to happen. Is it going to be later this year? Is it going to be early next year? We don't know. I certainly don't know.
Nope. I mean, listen, we have to I've always said, create a thesis around it, and then you have to kind of look at probabilities and then make decisions based on that.
All right, Patrick, we've covered some amazing housing data. I think that was a great conversation. We've talked about the number of new homes and the housing starts and how that is not going in the right direction. We talked about inflation. We've definitely had some economic overview here, but the last topic I want to discuss is GDP, productivity, labor. What's happening in the economy and how are things going? What kind of data are we seeing out there, Patrick?
Well, we're getting softer and softer. At the end of the day, when we look at GDP per capita, it continues to digress and stay very, very soft. So, the productivity issue, I've talked about it for months, and then Bank of Canada finally came out, deputy minister, and I've just lost her name and off the top of my head right now. But ultimately, I talked about it in the last episode of Rein It In, which is to say, in case of emergency, break glass. It's become a very big quote, given it came from the Bank of Canada when it comes to productivity. And guess what? It's time to break the glass. And so this goes back to what we've talked about many, many times, JG. Manufacturing is down, imports. Canada's just not stepping up to give or share the world with the world, sell to the world what the world is missing in terms of commodities. They're putting blocks around the oil and gas industry, which makes no sense whatsoever. And so we see our productivity drop. We look at the employment that's happening and the absolute spike in public service jobs, public sector jobs. Now, if you've got a public sector job, got it. But at the end of the day, depending on where you are in that, it's not a productive job. It's administrative. So do we need that level? I guess this government thinks we do. The point of it is that when we look at productivity, we are just not there. And of course, that's what we need to drive that gross domestic product.
What do you think they should do, though, Patrick? What do you think they should do in terms of productivity? Got it. But what's going to turn the ship around is my question. What are the indicators that investors should look for that something's going to change here?
Government, you're not going to change anything, because I go back to what I said. We're not investing in manufacturing facilities. We're talking about EVs, and we're going, okay, where's that going? Billions of dollars. So that's one small part of a bigger picture. Then we're not looking at the exports that we have in terms of commodities. We're not investing in research and development, which has been Canada's, I think, shortfall for years, is that we don't invest in research and development, which drives huge jobs. Now, on the other side of it, yes, technology is picking up, and there'll be somebody there going, yeah, but Patrick, technology is going to rock the world. Got it. But it's still not enough. It's not one thing. It's got to be a number of things. And when we look at the commodities that we have, from minerals to oil, I mean, just as an example, we're often importing more than we're exporting, and consistently. And even when we do export more than we import, rarely, it's fractional. It's meaningless. So then on top of that, we've said, JG, you and I've talked about this so many times, I've lost count, and it doesn't matter about the count. The point is that we have an economy that was debt driven based on what was happening in the housing sector. And that was our primary source of revenue in this country, primary source of jobs.
That was our manufacturing.
Yeah, that was it. And then we just shut it down, and we continue to shut it down. So what do you want to say about that? I mean, at the end of the day, until we get a different government with a different view of the world, and then that's going to take time to unfold. We were talking just briefly off camera about Bruelli out of El Salvador. Here's a guy who is totally taken a country. So it is possible. He's taken the El Salvador as the worst rated country for production and for crime. And he's literally done a 180 with it. Now, there's still time. It still has to go through the process, but I'm observing it from the aspect of, yes, it is possible. And he's doing some remarkable stuff. And it's just an example that it is possible. That's the point. So it does take time, however, and that's what we're going to bump up against. Trudeau will be gone, Liberal NDP will be gone, and then let's say Conservatives move in. They're going to have to, it's going to be painful. Fixing the problem is going to be probably more painful than what we're going through right now. So it'll be, anyways, we got a few years ahead of us of uncertainty.
We will have lots to talk about on Rein It In, let me tell you. We'll have lots to talk about. This is an interesting chart, Patrick, I want to discuss, which is you can see here how the US versus Canada is starting to gap in terms of our per capita GDP, meaning the US is going up in per capita GDP and Canada is going down. Now, I find this a little bit fascinating, Patrick, and I wonder, and my question to you is this happening primarily because the US has really had, they've really shut down immigration? I mean, they don't have anybody going into that country right now. Well, not legally anyways, lots illegally, but anyways. Whereas in Canada, we've opened the floodgates, and even though that's recently, the tap has been turned off recently or slowed down, since this chart really, if you look at it, essentially since 2021, is that why our per capita GDP is down? Because our per capita has gone so far up and our GDP has not.
Well, exactly. That's a big part of it. And then let's not negate that what's happening between Canada and the US. It's not like they're buddies with us anymore. So there's also one of our trading partners that have throttled back as well. So there's a number of factors that go into it. But to your point, as Canada has now said, okay, we're not going to bring in as many non-permanent residents, we're going to start to see that number decrease. We may start to see a shift in numbers in terms of GDP per capita. But here's the fundamental around it all, JG, is it takes time. These are things that we're looking at this today and everybody's going,
yeah, but it hasn't happened yet.
Well, it's like it takes months, sometimes a couple of years before we start to see the effects of it.
Yeah, this is a very slow moving boat. And you make a little change at the rudder and you make a little change in direction. You don't see that change for a very long time. And that's the process we're going through right now. Here's another great chart on seeing the divergence between the US and Canada in terms of real GDP per capita. This is quarter over quarter. So definitely interesting to see where the world is going, Patrick, as we move through the rest of this economic condition. And listen, we're in Q2 of 2024 here. It's still the beginning of this year. And by this point, remember, if we back up the tape, by this point, like last year, but in summer of last year, we were saying, by Q2 of 2024, we will be 2 percentage points lower than we are in terms of interest rates. So, right, a lot of people were saying that. Things have changed quite a bit, is what I'm saying.
Yeah, I mean, where it was going and where it is right now is, or where people anticipated it going and where it is now is quite different. I think there's a fundamental here too, JG, when we talk about GDP and where Canada's heading. I have to say we would be remiss not to talk about the budget and the impact of this budget. And the impact of this budget and just the capital gains alone, just in the shift of capital gains, taking it to 66%, over 250. And I get all the numbers and all the math, but at the end of the day, what it's done is it's already shut down the market and pulling cash and capital out of this country. And that shift in the budget can, in fact, and I think will, in fact, have a huge negative impact on us economically. And that's already hitting headlines as money leaves the country.
We could see here that red line. I know it's not that big, it's kind of small, but that red line essentially shows, as the budget came out, the net inflow into the country is down like negative $40 billion when typically it should be going in the opposite direction. So Patrick, yeah, not looking good already for sure.
Yeah, and it's only going to escalate from here. Now, at the time of this recording, the budget may not get approved, or it will, because the NDP will continue to support that initiative. But at the end of the day, when Canada is doing what Canada is doing, we are shutting down for business. This goes back to productivity. It goes back to our GDP growth. It doesn't look positive at all. Now, I want to just get, as people are listening to this, it's like this bad news rein it in segment. there isn't a ton of good news in it, but you have to look at the small part of the world that we are really focused on right now, which is saying, what does it mean to us as real estate investors? And when we look at what's happening, there's a whole different dynamic happening in Canada in terms of what we've got for supply, what we've got for population growth, that even if they shut down population back to, let's say, 300,000 or 400,000 a year, we still don't have the housing to accommodate it. So as investors, we still see a strong upside.
So, Patrick, I find this a fascinating time because it is in these moments when the headwinds look the strongest, when the news kind of looks the glibest, and it doesn't look great. This is the moment where the real investors have to see through this and have to be anchored to. And I think we have to talk about, Patrick, like the real estate investment is a long-term game. You got to be investing for not 2023 or 2024 or 2025. You're investing for 2030, 2040, 2050. So you have to look that far out, and you can't let the current picture of today dissuade you too much, because then you're always going to be on the sideline, Patrick. That's the truth.
Well, there's another side to it, right? And you're going to wake up if you don't continue to do the grind, work through this whole issue, is that you're going to wake up in 10 years from now and go, oh my gosh, shoulda, coulda. And the dollar that I earned today is worth significantly less than it was 10 years ago. And you haven't put your capital to work. And, it does take some courage. It does take some work, because you've got to stay educated. It's why within REIN, we have the community and we surround ourselves with like-minded individuals who can actually see the future. But we have to plan for the future today and start taking action today in order to have a wealthy and I guess we'll call it some security and certainty in our financial future 10 years down the road.
I totally agree, Patrick. And I think this has been a fantastic episode of Rein It In, and where the market is today, and the kind of courage real estate investors have to have in order to see the future, because to create financial security and certainty, you definitely need courage, especially in these economic times. But this has been a great episode, Patrick. Thanks so much for this.
So JG, always good to have you back, be able to riff off this kind of stuff. Remember, folks, like, subscribe, comment, let us know. And let us know how you're doing with your grocery bill or your cost of living. We want to hear about it. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.